Hey everybody, it's Mike from Orderflows and welcome to today's video. Today is Wednesday, January 4th, 2023. It is the day that they released the Fed minutes, and we're going to get into some of the interesting order flow that was there today in the E-minis. Anytime you have a Fed announcement or minutes coming out, or CPI, non-farm payrolls, it's always interesting to take a look at what was taking place at the market, sort of leading up into it, and afterwards. But before we begin, be sure to like the channel, subscribe to the channel, and more importantly, like the videos, because that's what helps us get found in the algo, and sort of gives me the motivation to keep making more videos for you. So coming into the day's cash session, we had a pretty tight range, for S&Ps, considering 3870 was the high, basically 3840 was the low. The low was actually 39.25, but more or less about a 30-point range. And for the S&Ps nowadays, that is considered a tight range. And then once cash opened up, we sort of tested the highs, pulled back a little bit, and started making new highs. We came off some more, but then we started making new highs again, going into around what time was that? Just around 10:30 or so. We started making these new highs. But what I want to talk about is that high that we had made up here at 10:58 to about 11, for about an hour before we started selling off. But what I'm going to do is I want to take a look at the cumulative delta. Okay, so let's just go back here. And so this was our high at 10:58, right? We had hit that high 96.25. Cumulative delta was at a high as well. And then what happens is we pull back a little bit. I don't want to say we sold off, but we just had this little bit of a pullback and sort of went sideways. And then we started making a run back up towards the high of the day. Again, 6.25. I think we got as high as like 4.95, I think it was. But what was happening is Delta started making another run, and we broke out and started making new highs in the cumulative delta, right? The delta for the day. However, price wasn't making new highs, right? So bear that in mind, right? When you're making new highs, you expect to see delta making new highs. And if it's not, that should get your ears pointing up and say, your radar going, say, something's going on here. Because remember, right, we got the FOMC minutes coming out here at 1 o'clock. All right. So if the day traders, the prop guys, the intraday traders, they don't want to hold their position through the FOMC minutes. Even though the Fed has sort of been hinting that they're not going to do any cuts for the next year, when you see the actual statement that says, yeah, we're doing a great job, and start patting themselves on the back that they're still staying hawkish. I don't know. It's just one of those things where it's these Fed minutes it's more of a congratulatory thing on to themselves. Oh yeah, we're doing a great job with the economy. Look at this, look at that. You don't really expect to see any major changes. They're not going to stick a line in there that says, oh yeah, we're gonna do this. But nevertheless, the point being, you're an hour away from the release of the minutes. Okay, so if you're a day trader, you want to sort of be squaring up your position ahead of time. And if this market had just made a new high at 10:58, and an hour later, more or less, we're coming back up towards the high and can't take it out, even though the aggressive buying is there, what is that telling you? So think about it. Let's break it down. You have aggressive buying taking place. Okay, you expect the market to go up, but it's not. Well, what's happening on the other side of the trade? Well, you probably have absorption taking place, or in this case, I'll say absorption because that'll confuse some people. What you have is distribution. You have supply coming into the market, basically absorbing all that aggressive buying. You have traders up at these levels up here that are happy to sell it to the, everybody that's coming in right now looking to get long. Because if you have supply, remember, right? If you have supply to sell, the easiest way to sell it is into a rising market, right? Not once the market starts dropping, because once the market starts dropping, everybody's looking to sell. But if the market is sort of going up That's the easiest time to sell a position, not when it's dropping. When it's dropping, you end up chasing price. Now let's take a look at what the order flow was, because what happened was, we made that new high in the cumulative delta, but price didn't make the new high. And then you start seeing signs in weakness. The big red cumulative delta candles, right? The big delta candles with the strong negative delta, and price dropped. S&P's dropped from more or less the 93 area down to the mid 70s, so almost a 20-point drop. And this drop happened very quickly. It happened in about 10 or 15 minutes. So let's take a look at the order flow chart. So this was the high, right? The high at 1058 over there at 96 and a quarter. And so we pulled back a little bit and more or less just went sideways. Where it started to get interesting is here, right? So again, this green line here is the high of the day, and we got up to what, 95. So we got within a point and a quarter. And before here, you're seeing the positive deltas in each bar. Nothing it's really big. I mean, you see some bars with some selling coming in here, minus 300, minus 100. But this bar here was very telling, okay, because for a number of reasons. One, obviously it's got a big, strong negative delta, minus 822 contracts. It's closing near its min delta number of minus 826, and it's got a very strong delta divided by volume number of minus 28. So that's why it's colored this magenta, this sort of a darker color. That's what our software does, is it will highlight to you, the trader, that, hey, you know what, you've got very strong selling taking place right now in the market. I mean, obviously you got this bar's got 1, 2, 3, 4, 5, 6 selling imbalances. Obviously it's a bit of a bigger bar than some of these others, but nevertheless, all signs are pointing that, hey, you know what, there's some strong selling taking place here. And again, you got to start to put the pieces of the puzzle together, saying, okay, we're at the high, we couldn't take it up, we got Fed minutes coming out in an hour. Intraday traders that were buying it in here on this way up, they're still trying to buy it, see if they could take it out. They're not. So now what you have is all these people that were buying it in here are turning sellers, right? They're starting it to take place here at this, bar between 93.5 and 91. Okay, back here on the footprint. And look at the volume. It's 2,898. It's almost 3,000 contracts. The previous big volumes, here's 2,300, here's 2,600, here's a 2,700, but you don't have these strong volumes like that, right? So the volume is sort of the strongest it's been in almost an hour. I don't want to say in an hour, because here's 3,800, here's 3,900 at the high. Yeah, you had 4,000 at 1058, and this high is taking, or sorry, rather this bar is at 1148. So within an hour, right? It's one of the highest volumes, definitely in the last 30 minutes. Okay, then it just sort of goes inside before you get another big flush right here, 38. From the 91 and a quarter down to 88 and 80, basically 88. So you got two bars, very strong negative delta, very strong delta volume, right? Because the 923, the final delta, is very close to its min delta of minus 948. So this bar is closing at almost its strongest min delta number, right? Min delta is how strong the negative delta was in a bar. If we're closing sort of on it, it's just telling you it's kind of overwhelming in that case. Then the 923, the bar is traded 3,329 contracts. 923, that number, the delta number divided into 3,329 is minus 27%. So, normally you're going to see the delta divided by volume. It's going to be a smaller number, 5%, 6%, 10%. But when you start getting above certain levels, that's why we color them magenta, because those we found stand out, because those are it's just something that's anything that's going to give you a hint before a move starts. And in this case, it's a move down because we're seeing the strong selling. You want to be alerted to that as early as possible, because it started here. Okay, maybe you might not have been convinced. Say, well, it's just one bar, maybe I'm not convinced yet, right? But then you get a couple minutes later another very similar bar, right? The strong negative delta, the strong delta divided by volume. So you got 2 bars within basically 4 minutes here, but basically on the other end of 2 minutes. What do you think the trade is, right? Because it got people dumping their position. And again, you're up here, right? You made a run back up towards the high of the day, and now it's starting to break down. You're seeing the delta, the cumulative delta. If you're watching the delta chart, you saw delta making new highs, price not making new highs. That's an important piece of information. Now you're starting to see, the aggressive sellers coming in here, right? Just killing all these bids. So that this reversal is probably starting. So even if you're getting, I'm not saying that you would have got short necessarily off this divergence in cumulative delta. You'd want to look for some signs in the order flow. You start seeing it here in this bar at 1149, and then again, you know what? I'm not convinced yet. By the time this bar comes in, you should be convinced. There's still plenty of time to be getting short around, the 88, 89. I don't want to say 90. I don't think it got up to 90. I think it got to like 89 3/4. But you got you got 1, 2, 3 minutes to get short before more selling came in, and it dropped from, 88 down to 78 over the next, 7 minutes. That's a quick 10-point move. Then you're out. You don't have to worry about what's going to happen here when the minutes are released, right? And basically the way I look at it is, everybody that was buying this market, looking for it to go higher, once they realize this market isn't going higher, that's when they became sellers. Because again, if you're an intraday trader, you're not going to hold it through the FOMC minutes. That's the time you go, you have your coffee, you go start making your coffee, and you sit and you see what's going to happen in the order flow, right? If you're an intraday trader, you're going to be kind of whacked on, in my opinion. I mean, the trade during a minute's release, I mean, that's just, sort of what I was taught many, many years ago, right? The only people that are busy trading during the FOMC minutes or announcement are the retail traders that are covering their ass. So, the FOMC came out, right? And you can see it knee jerk down, spike up, back down again. And, just to give you a point of reference, right? The high of this bar at 1 o'clock, 91 1/4, we'll call it 90. Down here, 74 1/4. 74 3/4. But you know what? We'll call it 75 to, what I call it, 91. 75 to 91. I can't do the math right now. 16 points. 16 points in that 1 minute, right? Keep in mind, right? We came into the day. That's what I was talking about. Understanding how quiet it was overnight. We had a 30-point range. So within 1 bar, we did half of the day's range in that 1 bar when the FOMC came out. Okay, and obviously you got some other bars that are just as big, right? And even some of these bars, this one was 69 basically down to 54. So again, about a 15-point bar. But again, there's obviously, if you're trading a 1 minute chart during FOMC, you probably want to change your chart setting to probably a 30-second chart to manage it a bit more. Because honestly, once that volatility picks up based off the minutes release, then this information gets old really quick, right? If you're trading, like these imbalances in here, right, you want to be trading them as soon as they're printed and seem to be holding. So, that's what I do. Right? I just go to a shorter chart. It's a little bit more manageable for me in terms of analyzing the order flow when a market's moving a little bit quicker, because that allows me to react sooner on the information that's coming. Because, for me, I like to wait for the bar to close. And if the market volatility has picked up quite a bit, almost doubled in the terms of, way price is moving, going to a shorter time frame or something that is going to allow me to analyze what's happening in the order flow quicker is, for me, a lot easier to manage the order flow. So anyway, guys, I hope you guys found this video a bit helpful, right? Again, watch for those cumulative delta divergences. You don't see them every day, honestly, but I thought that with that cumulative delta divergence taking place ahead of the FOMC meeting, it set up, a nice trade opportunity. So all right, everyone. Again, if you like this video, be sure to hit the like button. And if you haven't yet, subscribe to the channel. I'll see you guys on the next video. Bye-bye.